morning, buddy. How are you?
I'm good. Can you hear me?
Loud and clear.
Yeah.
All right. I'm trying to share my screen.
You can do so now. I just finished my sharing mine.
Okay.
What's on the radar, bro?
Well, I wanted to give you an explanation of hogwash, seeing as I'm in the Midwest near Iowa and Wisconsin.
Yeah.
So hogwash is the garbage and just the junk that you throw to pigs to get it to eat. So pigs will eat almost anything. So for all those people in the audience who have seen the movie Snatch, there is a very famous pig scene where they're trying to get rid of the bodies, and this guy comes in, and you can tell by his face that he's a little maniacal. He says, throw them to the pigs. The pigs will eat anything. Wow. And I think that's a good analogy for today's stock market because...
the pigs eat everything. Yeah.
Oh, yeah. And the narratives, right? The hogwash that's out there, I think is off the charts. It reminds me very much of 1999 and 2006. So
you know, Kirk, the only thing that was missing from calling this market a bubble pre-COVID was the rather low participation from the retail side in the rally. I think that they've now managed to add that to the mix.
I agree. Back in one of our early interviews this year in January, I talked about, and this is the one that we did in January, and I've highlighted the word correction. And I would encourage people to go take a look at this transcript that we talked about. And what I suggested is that early in the year, there'd be a volatility event. Clearly, at the time, we didn't know it would be COVID. But the market was overvalued. And a volatility event we knew would stimulate the Fed. And that would draw people in because we knew, and we knew that people respond to the Federal Reserve printing money. So we talked about all that right here months before it happened. Then we had COVID, and back in January, before it was on the radar, I talked about COVID being the most important story in the world. And people were like, huh, what are you talking about? So eventually, ahead of the big correction, we talked about the big correction with my subscribers. I'm just going to get rid of these as we go through. That's my website, Fundamental Trends. And I just want to consider all these things in the context of the 2020s in general. We know that sustainability and smart asset allocation and really having a simple rules-based approach is probably the smart thing. And we want to invest in disruptors and divest the disrupted. And this is an idea that came straight from Druckenmiller, who hard to question anything the guy says, right? So in the broad context of investing in the 2020s, COVID changed the landscape and really accelerated and amplified a lot of things that we thought were going to happen already. So when I was at the Consumer Electronics Show in January, a lot of things started to make sense to me about how the 2020s were going to go. And I was looking at it over a time frame of 7, 8, 9, 10 years of how things would happen. And then COVID hit. And now we're looking at a time frame of 2, 3, 4 years that everything's going to happen. It's all going to happen faster. It's going to happen bigger. If you were listening to Joe Biden the other day, who I predicted a year ago would win by 10 million votes, and I made money betting on Bovada on that, got 6-1 odds, when everybody said that Biden didn't have a chance back in January. His stimulus plan is going to be a $2 trillion Green New Deal. That's what he's talking about. So if he ends up winning and getting Congress, this whole idea of sustainability is going to be a big deal. How does that play into everything else? Well, just to go back a little bit here, because of the Fed printing all that money, I had talked about a massive gold market before the Fed intervened. And then here on this show, I bought GDX on air at $17 a share. And what is it now? 40, 38? So some of the things we've talked about on this show have been spectacularly right. So I'm going to talk about a couple things today that I think you're already talking about at the top of the hour usually. I want to talk about the dollar. This is an article that I wrote back in 2012 when everybody thought that the dollar was doomed. And I gave 8 reasons on MarketWatch why the dollar was going to be the reserve currency for 40 more years. Generations. We're going to have generations of the dollar being the reserve currency because there really are no other alternatives. And the euro is so impaired that one of my predictions...
Kirk, sorry to interrupt. What about the alternative of just going back to something like to the or something like the gold standard? That's always an alternative.
It's not an alternative.
I remember the basic, one of the reasons, the main reason that the dollar became the world's reserve currency was because the US said, okay, now that we have 85% of the gold reserves of the planet, why don't we just, make the dollar the world reserve currency and, it's going to be redeemable in gold. And that's how people, countries went into the deal and said, yeah, okay, it makes sense.
The reason why we will never, ever, ever in a billion years go back to the gold standard is because there wouldn't be enough gold to redeem all the currency that we've printed. So, this idea... And I understand the Austrian arguments. I went to school for this. I've studied it for 30 years. And I don't want to get on a big, long diatribe, but the interest of the United States is not to have a gold standard. Therefore, we won't have a gold standard. It's really that simple. There is no fighting. And I know that everybody wants to because, let's support the little guy. Let's have a theory about this or a theory about that. But the reality is that the United States is so strong. We have such a gift of geography. We're safe. We're diversified. Unless we have a civil war, the United States is going to be the strongest country on the planet for a very, very, very long time. And the only real competitors are Europe, and they can't support each other. The bill that they just did is a Band-Aid. And the market will represent that soon. And Russia, and China, they have some of the things it would take to be real leaders in the world if they would show some real leadership, and they can't do it. And it'll take generations for Russia and China to right their ship. And I predicted a decade ago that the euro would eventually explode, even though it's the best thing for them. The best thing for Europe is to be tighter together and have the euro be a competitor to the dollar, because eventually scarcity comes back because of the investment cycle, and we're at the cusp of that, which is behind the 2 investment ideas that I have here in a second. But back in 2014, I predicted that the euro would go to parity. I was buying puts on F.A.C.E, and also I dabbled in the futures market back then and made a whole bunch of money on the initial decline in the euro. The euro has stabilized, tried to show some strength. It didn't. Ultimately, the euro is going to go to parity with the dollar, plus or minus. So the rally in the euro, while it could get up $1.20 maybe, I think that it's more likely to turn over here in the next bit of volatility, which I see in the next 2 or 3 months, very similar to your guest yesterday, Mr. Newton. So you see the euro is going to turn over probably in here somewhere. And then it'll end up over there in here. And I will trust you guys with the short-term movements. the day-to-day and week-to-week stuff, because I'm looking at weekly charts, right? So my weekly charts are way different than your hourly and 4-hour and even daily charts. But the euro, just because of all the inherent tribalism in Europe, they are never going to do what they need to do to make the euro the strong currency that it really truly should be, until they have an even greater crisis. When they get to the point that they have inflation where the United States is exporting inflation to them, somewhere in this yellow box, they will start trying to figure out, okay, do we break the euro up? And that could happen because of all the parochialism there. Or they could say, you know what? Let's tie ourselves together a little bit more. Let's take these frugal four, who are really hypocrites, and figure out what to do about the euro to make sure that we don't have inflation in an era where scarcity could come back. One of the things I would point out with the frugal four is Norway. You take a look at Norway, right? Somebody can turn off their mic, but Norway made all their money
I'm trying to see who it is, but
in oil.
we all seem to be muted. I don't know where it's coming from.
Okay, well, someone's got a television on. In any case, Norway made all their money in oil. So I would take with a grain of salt anything that Norway says about maintaining the budget, or the Norwegians, or anybody over there. In any case, the dollar will stay strong. It'll be range bound. It'll be tradable. But the currency that I like, which you guys talked about this morning, I don't remember who was talking about it. I really like the Aussie. So going back into the framework of everything that we talked about, of how the 2020s are going to shake out. Oops. You take a look at the Aussie. So as the world decouples from China, who stands to benefit? And I think it is clearly the Australians, who are going to benefit from the United States not being as involved with China as we have been. So Australia will become even more of a supplier to China. And consider this wild card. I think it's very likely that the United States, just like they have in the past with oil, I think the United States is going to ban the export of coal. And I think it's going to happen next year or the year after.
Why?
So if we ban the export of coal, what does that do? Right? That is a major change to the economic landscape of the whole planet. It'll be done in the name of climate change. I'm not arguing right or wrong. I think it's right, but I'm not going to argue it. And that means that Australia makes a ton of money selling coal to China in the short term. So while we have had oil economies that have extremely strong currencies, consider that China is going to get a lot of food, right? They're already taking parts of the outback and irrigating it to make it into farms for the Chinese. But they're also going to get a lot of their copper and a lot of their coal from Australia. So I think that this has been an amazing opportunity to buy into Australian currency. If we get a little bit of a correction here in the next month or two, I should move that over a little bit. You'll see the Aussie dip. I've targeted this area here, which is the same area that you guys have targeted. I think that you have to buy the Aussie on the dips. Now, depending on how bad things get, I mean, it could go all the way down, close to the low again. I don't think that's extremely likely. This level here, about 63 cents, right? About 63 is probably about as low as I expect it to go. But even up here, right, 66, 67, right? It doesn't have to go down much to be a buy. There's also, if the dollar keeps weakening, right, it could jump up. But I do think the dollar has a little bit of strength left in it this year. If you take a look at what the dollar did under the Obama administration, we're in for more of that. I know that people don't like to hear it, but Biden's going to be the next president. And he's going to win by somewhere in the range of 8 to 12 million votes. So it's not going to be even terribly close. And what's going to matter is not just that he's the president, is that the down ticket, if you've been watching all the swing state senator votes, the Democrats are killing everybody. Mitch McConnell is like 7 points behind. So you should start thinking about, if you're objective, you want to argue politics with me, fine. But if you're being objective, if you're looking at the data, and I get data from several hedge funds that do private polling, and I was tipped off to this by Druckenmiller last year in an interview he gave with the New York Economics Club. He said last year around April, May, that he was doing private polling data, and he said that Trump was going to lose last year. I just, I'm kind of a city guy, and I'll tell you what, at the risk of using the word black, I've got a lot of black friends. That's where I grew up. I'm telling you, the black vote's coming out, and Trump doesn't stand a chance. So if you really, truly are trying to figure out which way some of these curves are going to break, keep that in the back of your mind, that you ought to be preparing not only for a Biden presidency, but for a Democratic-controlled Congress. And the Aussie, I think, makes a ton of money on the decoupling of the United States from China.
Any chance that the election doesn't come off because of COVID and social unrest and Trump being behind in the polls to try and postpone the inevitable?
So I will tell you this. I heard, I don't know if it was yesterday or day before you guys, it must have been yesterday you guys talked about that. Somebody mentioned it. Did Mark mention that? I think that if he tries to postpone the elections, you will see a massive assault on the White House. I think you will see millions of people go to the White House, and they will run over the police and the military, and they will take Trump out of there. That's what I think will happen. So if he tries to do that, he's in trouble.
I also have a question. First of all, I don't disagree with you. I mean, I have been saying since last year that, if the economy for any reason went bad, Trump wouldn't stand obviously much of a chance. And, since then we've had, evidence that, the chances are even smaller. Of course, nothing is impossible, but yes, theoretically speaking, Biden is a very high likelihood for being the next president. The question, though, is what do you think, how do you think this is going to affect, first, the economy, second of all, the stock market, given the fact that if one thing is a given among all Democrats is that they've clearly stated that they want to increase corporate taxes by a lot, and that should definitely affect earnings, right?
Yes, and I have, at the start of the year, I talked about this. I expect after Labor Day, probably, maybe sooner, I expect the second half of 2020 to be a lot like the second half of 2018, and we actually talked about that in the one that I X'd out, that webinar in January where we talked. Everything the market's done has pretty much gone to script except more, right? It's been amplified. And I think that the stock market gets a correction here soon, month, 2-3 months out. But I think that there's a possibility, because a lot of Democratic money is sitting on their checkbooks right now. They're not investing in the stock market. If you go over to Sentiment Trader, if you use that, there's a smart money, dumb money index. And you alluded to it earlier. The retail side, the dumb money, is piling into the stock market, but the smart money, a big hunk of the smart money, is sitting on the sidelines. People like Warren Buffett. And I think that, if you want conspiracy theory, I think that you can start to think about, okay, is any of this Democratic big money going to come in the stocks before the election? I think the answer is no. I don't think they invest until the election is in the bag, because I'm of the opinion, and I know, and I hang out in these circles. I'm of the opinion, and I think a lot of those people are of the opinion, that if Trump would win, we'd probably be in a depression for a while. So we probably see.
Why? What's their reason?
Because the wealth inequality is a real issue. And there just isn't enough money out there to float the stock market and the economy running $1 trillion and $2 trillion a year deficits. That would be the one thing that crushes the dollar and causes stagflation. I mean, if you want the recipe for stagflation, look at what is going on with all the economic numbers. I've had this up in other reports. All the economic numbers started to turn over in 2018, right? We got the sugar high from the tax cuts, the
and then it started waning. Yeah,
and everything started to fall off. So I predicted before COVID that we were gonna have a rough year, and then COVID just made it worse.
Okay, so a depression under Trump, and what do we have? Stable economic growth under Joe Biden?
I think that we see very similar to what we saw under Obama, under Biden, except I think that it's very likely that Biden governs from the left. I think he runs as a centrist, but I think he governs from the left. And when I say he governs,
so Biden's Roosevelt.
And I think he's a lot more Green New Deal than people give him credit for. What he talked about the other day, the deal that he signed with the Sanders people to keep them on board, is significant. And if they have a blue wave, then you better get out of the old economy stuff. And I talked about that 2 years ago, that people have got to get out of the old economy stuff, because your smokestack industries, anything that can be automated, oil, you have big problems in all of those markets anyway on the secular side. So rather than those industries drifting away, they're going to get blasted away. And when you see the investment that comes in on the sustainability side, when you see alternative energy, when you see rulings from the Supreme Court on a FERC rule, right? The FERC has a rule about batteries, and the utilities were fighting it. So now you're going to have a decentralized generation system in this country. That's bad for the utilities. The fact that the utilities are rallying lately, it's a stupid rally, because this ruling it was a headline, and nobody pays attention because, alternative energy is decades away. Baloney. Alternative energy is the fastest growing thing out there right now.
Well, Mark thinks the utility rally might be a little bit of people starting to hedge their bets that this rally might be growing long in the tooth. So utilities are people getting defensive.
Yes, I agree. That's part of the whole rotation, but it's wrong. That doesn't mean that it's not happening, but it's wrong. The utilities have major structural problems because they're going to lose their monopoly on generation. And they're going to have to figure out how to pay their debts and make money as transmission sources, right? They're not going to even replace a lot of the coal-fired power plants that are closing, because commercial industry, and this is where you're going to get your bump on earnings, places like Costco or Kroger or Kohl's or Walmart, companies that hang in there and they make their properties energy generation, right? Because they'll slap solar panels on the roof. You can see those projects all over the country. Now, with this FERC ruling, the utilities have to grant them access to the wholesale power market. They can charge a fee for the connection, but these big box stores some of the companies that have the ability to generate their own energy because of where they're located, the shape of their building, things like that, they're going to make a lot of money. So one of the things I'm
Selling
talking
back
about,
the power, to utilities.
and producing their own power, right?
Right,
So
that saves them money, and then
right, so they save money producing their own energy, and then they have an excess because they have a battery system.
right.
The law is going to require that they're able to be plugged into the grid. Microgrids are becoming a big deal, right? So if you have an industrial park that's a mile away from from a bedroom neighborhood, a residential neighborhood, that residential neighborhood is going to get a lot of their energy from the industrial park on a microgrid that probably the utility has to maintain. So you have to consider which companies are going to fit in with this new economy, this smart everything world, alternative energy world. Who's going to fit in best there? And that's where the huge opportunities will be. And Biden will support all of them. And then on the other side, you're going to have the companies that don't fit in, and they're going to have a problem.
Kirk, just something that you mentioned that conflicts a little bit, or perhaps I haven't understood it correctly. You said, and we agree 100.0%, that the US cannot keep running these type of deficits because that's going to inevitably lead to stagflation. No disagreement whatsoever. But my next question is, how is it possible with Biden being the president, and you said it, and I agree 100%, that he is heavily influenced by the, as they call themselves, democratic socialists of the party. How is it possible that a government mix like that will not run even higher deficits when, just by looking back, we know that irrespective of Republican or Democrats in the government, deficits are just going higher every 4 years, no matter what.
So under Obama and under Clinton, the federal deficit as a percentage of GDP decreased. Under both
as
of
a percentage of GDP.
Yeah, under both of them, right? So you should expect the same thing. Now, I've also suggested to my subscribers, and I'll mention it here, the Fed balance sheet is basically bailing out the corporations, correct?
Yes.
At some point, the Fed's going to have to be bailed out. Well, I was looking at all these charts last night, and it struck me we're a lot closer to another financial crisis than I thought. I thought it wouldn't be till the 2030s. I think it's probably late this decade. 7, 8, 9, 10 years from now, we've got some major debt issues. And you have to consider that the Fed's balance sheet is basically leveraged out for 5 years, correct? They basically took on debt that was up to 5 years. And I believe that at some point, because this is all corporate debt, most of it's corporate debt, you're going to see the federal government allow all of these corporations to convert that debt into equity. So the question becomes, where does that equity go? Does that equity stay on the Fed balance sheet and they sell it off and the money goes back into the Treasury? That's one solution. The other solution to keep the stock market from crashing is to take that equity and seed a Social Security trust fund with it. So I think that given that we know the Social Security is going to be in 30% deficit a decade from now when all the baby boomers are retired, one of the smart things that we could do, and I've always argued that when things make sense, they eventually happen no matter the opposition, right? Kind of the Gandhi approach. Eventually, I think it will make sense that a portion of Social Security has money going into the stock market. Why is that important? Because it solves a lot of problems all at once. One, you do a helicopter money drop to seed everything. And I think we literally have to print an economy. I think we need to print around $20 trillion sometime in the next decade. And I don't mean creating treasury debt. I mean just printing the money. But then you ask the question, doesn't that create hyperinflation? No, if you do the right thing with it. If you use that money to actually solve problems, and then you only trickle it in slowly over 30 or 40 years through Social Security and all the pensions that are underfunded, if you want to pay for a couple pet projects along the way, I get it. But if we print $20 trillion, we bail out the entire retirement system, we bail out the Federal Reserve, we put equity into the Social Security system, we write a law that says 20% of your payroll deduct goes into stocks, and then all of a sudden the stock market is strong for another however many decades. And we've seen a similar system down in South America. I forget which country does it. So a lot of things that make sense will happen along the way. People will have to set ideology aside. And with the demographics of America, it is clear that we're going to take a half a step to the left. And a lot of these ideas are half a step to the left. So will corporations be as profitable? Yes, I think so, but not all of them. There is a huge bifurcation coming in the economy. And if you try to stand on the side of old smokestack industry, of stupid production models, of importing cheap labor from China, right? Of producing overseas to get a labor advantage, you're just on the wrong side of the equation, because machine automation, right? Machine learning was already changing how supply chains worked. Yeah, Trump came in there, did the tariffs, had the trade war, whatever. It didn't really change the fact that everything that he was talking about was going to happen anyway. We were already going to have less reliance on China because supply chains demand that a robot, because it's cheap in both places, demands that you have production near the consumer or the raw material, right? It doesn't make sense to take a raw material from South America or the United States, send it to China to be produced, and then ship it back or ship it somewhere else. It makes sense to do the production near the end consumer or near the resources, in which case America's good for a lot of that. And again, that's why I say, I take the Buffett approach on America. You are a fool if you are not investing in America, because everything's going our way forever. I mean, unless the world ends, this is the best place to be in the world for economic opportunity. I don't care. Maybe there's some small little countries, but the reality is that our economy will be the leader again. It'll continue to be the leader. A lot of the things that we've done since the 70s were designed to keep the peace, because we knew, right? We knew that making sure that people had a pot with a chicken in it would keep them from being angry. So even though we're going to pull some production from China, and Japan is already doing it, and that's to protect the supply chains from the communists, the reality is that we still are going to have a lot of companies producing things over in China, but it's going to be for the Chinese. The whole import-export infrastructure is going to change. You want an industry that's going to get crushed? Take a look at shipping. Shipping's going to get crushed again. This rebound is silly. So as the world changes, as it always does, you have to take a look into the future, try to be a futurist and say, okay, what makes sense? How's it going to get there? And some of the things out there, I'm looking at weekly and monthly charts. So you guys are going to look at this differently. But I tell you what, I should have been investing in Australia down here. I have to buy the pullback. I don't know if it's going to get down to me. I might have to move my lines up a little bit.
Okay.
We'll see. Australia is going to do really well because the United States is probably going to change our policy towards China. And we know that the Australian government will take advantage of that. And that's fine. They're our ally. They love us. We love them. We'll let them make that money on China because it makes sense politically to tell China, hey, we have to take a little harder line with you.
Okay, Kirk. So the best way for people to follow your commentary and, your ideas and your website.
Fundamentaltrends.com is my website. But I'm
Okay.
also on Seeking Alpha, and I write a lot of public stuff there.
Okay.
And I actually, we don't have time, but I talked about oil, and I will just give you the takeaway here on oil. It's going to be range bound and choppy for a really long time.
Okay.
I don't see a big breakout in oil. I don't see a big breakdown in oil. I think it's going to be choppy here because if it goes above about $55 a barrel,
Yep.
then the frackers kick it back in. And if it goes down here, nobody in the Middle East makes money and Russia doesn't make money. So they're going to do their best to keep it in this area. Could it get up to the lower 60s? It could. But then all of our oil companies, who will soon be owned by private equity and Warren Buffett and Carl Icahn, then they start kicking it in. So as the price of oil goes up, we get more fracking is basically the bottom line. Although it's still going to be tighter. I'm undecided about if the top of this range is middle 50s or middle 60s. I'm not really sure. I mean, middle 60s makes a lot of sense for a lot of people, I guess. But we do know that the automobile industry is going heavy into EVs in the second half of the 2020s. So that'll suppress demand. So I think that you can trade. If you're a good day trader, you can trade the heck out of oil in here for the next 5 years, 6 years, 7 years.
Okay. Range bound. And you're most bullish Aussie because of their relationship with China and their ability to sell raw materials to them. Correct?
Right. The decoupling of the United States from China is going to be very positive for Australia.
Got you, buddy. Well, I want to thank you for coming in and giving us an updated view of the things that you think of. And good to know that the U.S. Is going to survive everything it's going through with your forecast. So thanks for some optimism in some difficult times here in America. Appreciate it.
Yeah, well, we'll have a vaccine eventually.
Okay, Kirk. Thank you, my trading warrior brother, everyone. That's Kirk Spano, and you could follow him on Twitter at Kirk Spano, and his website and Seeking Alpha. Kirk is sought after for his ideas. Thanks for sharing all those ideas for over 30 minutes today, buddy.
Take care. Sorry to be long-winded.
Oh, that's fine. Thank you so much, man.
Take care.
All right, everyone, that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. Good luck, everyone, for the rest of the day. Tomorrow I have Meb Faber. I believe he has a very large following. We'll see. It's going to be his first time here in F.A.C.E.
That's an amazing interview you get to do.
Oh, you know him?
Okay. I've talked to him indirectly. He doesn't know me, but I follow him. I actually have started to build my ETF model portfolios largely on a lot of the things that he's talked about the last decade.
Wow. Okay. Thank you, Twitter. That's all I could say. I invite and some of them come. Build it and they will come. Thank you, buddy.
Take care.
See you, Kirk. See you, everyone. See you, warriors.